Hello, this is James Smith at GannAnalysis.net. Today we're looking at the euro dollar. We're starting from this low here in October 2000. We're connecting to the high of July 2008. That is the range that we use to project the square of the range. So in this case, we use the one by one. We've decided on a price unit, which is the scale 0.00325. What does that mean? It means that for every month that this red line declines, this is the one by one, we move forward 0.00325 points. That's the scale we're using. And the 2 by 1 would be twice that scale. The 1 by 2 would be half that scale. Those are the primary lines that we're using. We're also dividing the square into 8 equal increments. So 1/8, 2/8, 3/8, 4/8 is also a 50% retracement of the entire swing. 5/8, 6/8, 7/8, 8/8. So there you have it. That's the way we divide it. Now in time we're dividing it into 1, 2, 3, 4, 5, 6, 7, 8 parts. So in price, 8 segments. In time, 8 segments. Now, you'll notice that the first division down from high in price gave you the high, as well as this 2 by 1 line down from high. That's a really nice setup. That means that the scale we chose was correct, or it's a useful scale because it's hitting time and price. It's hitting a top here in price. This 2 by 1 line is also hitting, and if we sell off, we form a low here at the 50% mark, we rally back, form a low here, 1/8 division forward in time, so that was a low. Then we rallied back to the 1 by 1 line, gave us the high. Again, when you're creating a square of the range, you want to see a lot of hits. So the arrows show you where the hits are, but we're just going through. You can see it found support at the 50% retracement. You rally back to the 1 by 1. You also have 2/8 distance in time through the square. You have a low, and then you have a low here, 3/8 of the distance, 1, 2, 3/8 of the distance through the square in time. You rally back just slightly above the 50% mark, but also pretty much catching the 1 by 1 down from high. That's kind of nice, both time and price. Very nice. You sell off, boom. Now, it would have been great if we'd bounced off this line, but yeah, you got close to it. Now, what's interesting now, you blew right through the 1 by 1, which gave you that ferocious rally in the euro. And we're now 5/8 of the distance through the square in time. So 1, 2, 3, 4, 5. And we're actually below the 50% retracement in price. So 1.21340 is the 50% mark. Until you get above that, you don't have a trade, at least not from a Gann perspective. So what I'm saying is, if you wanted to buy the euro, you're probably better off waiting for a close above 121,340, that 50% retracement. Otherwise, the risk is that, hey, you keep bumping up against it, it might be forming a top. And certainly the 5/8 division in time is telling you that you have a high. So it would be ill-advised to buy the euro right here, right now. Doesn't mean it won't blow through this tomorrow and go higher. You know, I'm just saying, keep an eye on this. If you short the euro and you see it close above 121,340, you probably have to cover your short or risk a move up here to 130 area. So that's a quick run through on how we'd use this square of the range for the euro versus the dollar. But you can see there's a lot of hits here. There's a high here, a low here, a low here, a low here. It's working pretty well. I would say, we'll just keep using it. You'll go out here and look for a change in trend in July 2023. We'll look for some sort of change in trend in January 2026. And as we complete the square in time, July 2028, we'll still be looking at this chart. So the usefulness of Gann is not just that, hey, it's working right here, right now. We can keep using it all the way out to July 2028. Now, if you exceed this square in price terms, all you do is create another division. Let's see here. We go up, okay, and let me see here. Okay, so you're going up. The square, here's the initial square, and then we create a new square going up. So what I'm saying is that this square is going to be useful for a long time, even if the price goes up, even if the euro somehow rallies above, say 160. Not very likely, but it's possible. Anything can happen in the markets. Or even if it just plunges here, I doubt that it'll get back here, but you never know. So this is a very useful tool from a Gann perspective. The whole point is we're connecting time and price. So we're seeing visually, you can see how this works. Visually, it is the time and price is mapped out geometrically in a relationship that is not obvious to people unless they actually physically do this. Square the range. That's why Gann did it. In his day, what he did was he had transparencies overlay a price chart. Everything was done by hand on paper, and he'd lay a transparency over the top of the square. It's a lot easier nowadays with computers, so this is really cool. But, this is a very topical example, and that's why I'm using it right now. I'm not telling you to buy or sell the euro. I'm just telling you what the Gann charts would tell you. And again, the point here is if you close above 1.21340, you're probably going higher. If you keep failing at this level, hey, maybe you're going down here to 111. So, that's in a very simple way of explaining it. That's how it works. And the idea is this is just one tool that Gann used. Obviously, there's a lot of tools. So today I wanted to explain the square of the range on the euro versus the dollar, and some other day, we'll look at other tools. But I hope this has been helpful. Remember my address if you have any questions, jamessmith@gannanalysis.net. The website is gannanalysis.net. We're doing some work on the website right now. It should be back up and running next week. We had to take it down for upgrades. So if you do go to the website, you'll find that you can't get in right now. But you can always send me an email, jamessmith@gannanalysis.net, if you have any questions about what I just discussed. And, look forward to hearing from you. Good luck with your trading, and I hope this has been helpful.